So as we come over and look at the S&P 500 today, closing near the upper end of the range. However, today I'm going to show you guys, even though this may look like a bullish candles, there's a lot of weakness under the hood. And if you guys want a chance to win a Take Profit Trader test account, let's see if we can run this video likes up to 350 likes. And then tomorrow we'll go ahead and announce a winner for the Take Profit Trader account giveaway. All right. So if we come over and look at how the indices fared across the board, the Dow was down 11 points, Nasdaq down 2 points, S&P 500 up 1.96, and the Russell 2000 down 3.02. However, if we look right here at advanced indices versus declining, even though overwhelmingly the stocks weren't crashing, notice we had 70% of stocks declining on the day. That shows that overwhelmingly there is more weakness under the hood. Then if we come over and look at the sectors across the board, notice only 3 sectors were in the green today. We had healthcare, we had financials, we had communication services. Every other sector was in the red. Then if we come over and we look at the SPY real quick, here's a daily chart of the SPY. We come over and we look at the equal weight S&P 500, the RSP, pull that up and notice we basically have an inside day to day. So notice there's a huge discrepancy. If you put this on the 5-minute chart, you can even see it play out even more. Notice that large gap that we had down this morning, which was induced from the news release we had out this morning. Notice we did not even get halfway into the gap on the equal weight S&P 500. However, if we look at the SPY, here's that gap right there. We ran all the way up, not only filling the gap, but we actually ended up going substantially higher than the last closing candle from the prior day. Then we came back down, went back up, and we are not that far away from all-time highs. If you look at the SPY right here, notice we can see the all-time high on the SPY is 646.19. And if we look at the high today, 645.62. So we are right there within the ballpark. Now, if we come over and look at the fear and greed index, you can see right now we're sitting at 64. The market is still feeling extremely greedy out there. However, if we look at the most recent investor sentiment survey, notice the bulls dropped down again. This is the second consecutive week where the bulls have dropped down. We can see the prior week reading was 34.9. This week, we have a reading of 29.9. And then look at the bears. The bears stepped up as well, going from the prior week at 43.2 up to 46.2. Now, all that is fine and dandy, but is the market about to head down? Look over here at the volatility index. The volatility index, here's that white line showing you guys, when we come down towards this area, quite often, this is where we'll see some type of volatility event in the market. Now, if we look at the VIX on the 5-minute chart, you can see here's when the news came out today. Big spike up. We came back down, a good chunk of that big candle, came back up, and then we slowly drifted down throughout the day. And if you look over here on the futures markets, notice we are not that far away from making another new all-time high. We have this push up, then we have a consolidation. Is this nothing more than a bear flag? And we do have some news to contend with tomorrow that could maybe push us up and out of that area. Now, if we come over and look at the news that we had out this morning, we had the weekly unemployment claims came in a little bit better than expected, 224,000. But look at the core PPI along with the PPI month over month. It was showed a massive increase. They forecasted an increase of 0.2. We came in at 0.9. And here's some of the headlines that we see. Wholesale prices rose to 0.9 in July, much more than expected. So are we going to find out that Jay Powell was actually correct and saying, whoa, let's not raise rates now? Or do you guys still think that Trump is correct and the Fed should be cutting rates? Let me know your thoughts in the comment section down below. Then if we look at this article right here, stocks retreat after hot U.S. inflation data shakes the Fed rate cut. However, I want to show you guys, it did not shake it that much, because if we come over and look at the Fed watch tool, we can see yesterday, I think it was a 99.9% chance the Fed would be cutting rates. Today, it dropped down to a measly 92.8. So yes, the chances did drop a little bit, but it's still overwhelmingly suspected the Fed will be cutting rates at the next meeting. Apex Trader Funding, 80% off all their evaluation accounts, pass in as little as 1 day. Tradeify, 35% off all their evaluation accounts. And My Funded Futures, save 15% off any reset fee. For those accounts, use code Mike. And for the platform with the best payout policy out there, Take Profit Trader, 40% off all evaluation accounts, no activation fee, and best yet, you can get your test refunded during your first payout. For Take Profit Trader, make sure to use code Epitome at checkout. Now, if we come over and look at the dollar index today, dollar index was up. Why is that? Well, keep in mind, if they think that the Fed just may not be able to go ahead and cut rates, that's going to put a little bit of strength over here in the dollar. Then we come over and look at the precious metal gold today. Gold on the move back down again. If gold really breaks that 786 level, 33.66, watch out. Gold's next stop would be be down here about 33.20. We breach below that. Then I'm going to start turning my attention towards the box down here, 31.84 down to about 31.22. Now, jumping back over and looking at the SPY real quick, we did close in the upper end of the range, but something I've been warning you guys about for quite some time. Notice the MACD indicator, even though we're pushing up and we're right near all-time highs, the MACD indicator is nowhere near its recent high. Then we look over here on the 4-hour chart and we see we have that push up and nothing more than a couple bar consolidation, 30-minute chart. And notice now we basically have two back-to-back consolidation days, D-shaped profiles. Now, consolidations or contractions usually do what? They lead to expansion. Now, is this going to be a big expansion on the way up? And if we do, is it going to be nothing more than a trap and a selling opportunity to bring the market down? Keep in mind, we have two gaps right in the line of sight in the near future. First one to be closed would be about 635.84, and the second one would be from last Friday at about 632.31. Now, when we come back over and we look at the futures markets real quick on this 4-hour chart. Now, something we were talking about today on the live stream as well. We have this structure breakout point right down here. Now, if you guys don't want to miss the next time I go live, make sure you subscribe. You have the bell notifications turned on for all. But if we look at the candle body right here to the candle wick, we basically drew out a zone. We did not hit that zone today. And if we were to pull a Fibonacci retracement from the swing low right up here to the swing high, notice the 50 and 61.8 level comes right within that zone. So I do think it would make sense if we get a pullback there. The only question is, do they run it up a little bit first, kind of set a trap before coming down there? Now, if we do start to come down towards this area, I want to warn you guys, this could actually set up a much larger A to B equals C to D pattern on the way up. If we just simply, if the low from today holds and we break out through the highs, the next target for the ES would be all the way up here at 65, 66, to 65, 67. Now, where we'd have to adjust that is if we drop down a little bit and we get into this zone, then we'd have to grab that Fibonacci extension tool and measure. If we went all the way down to the bottom of the zone, then you can see it would bring that price target to about 65.41. Now, if we're dealing with an ABC pattern, just note that the pattern is not validated until we take out the swing point, meaning we take out the B leg, we take out the B point. Here's the A point, here's the B point, the top of the impulse leg. So once we take it out, that pattern then becomes validated. Now, if we come over and look at the daily charts on the 30-minute chart, notice we have a D-shaped profile today and only a 42-point range. The average range is about 76 points. And notice we were able to take out that P point that we talked about in last night's video. And if you look at the volume profile levels, value area high will be 64.95. If we can breach above that, then I would want to target the high from yesterday. And I'd also then want to start to focus on an ABC pattern to the upside that we just spoke about off that 4-hour chart. But if we come above value area high and then we start coming down, I'd want to target the point of control 64.85, then value area low, which value area low is also in a kind of a little minus development area within the profile. Then we could target this high volume node here, 64.72. Then I'd want to play down here towards these wicks. And I really want to use this second candle's wick right here, somewhere in the ballpark of 64.61. Anything below that, then I'd want to zoom this out a little bit and say, all right, can we go back and try to repair some of these areas on this prior profile? This high volume node area here, the minus development area down here, about 64.42, then the next high volume node. Keep in mind, 64.41 would also be right within this zone that we already mapped out off that 4-hour time frame. Now, before we come over and look at the Qs real quick, I want to take a look at the economic news for tomorrow. This is going to be important. At 8:30, we have core retail sales and the Empire State Manufacturing Index. However, I've seen this on many occasions. When we get the preliminary consumer sentiment, preliminary inflation expectations, quite often this will cause a trend day in the market. And we put that together with the fact that we've had back-to-back consolidation days, that could lead to some type of trend day. Now, is it going to be a breakdown or a break up? We have to wait for evidence to see which way we break. Now, if we come over and look at the QQQs real quick, notice this looks a little bit different than the SPY. SPY has a very small wick on the top. On the Qs, we have a little bit more of a selling tail up here. MACD indicator still, as we're up by all-time highs, is still not confirming these new highs at this point. If we do start to pull back, one of the areas I want to watch would be this prior breakout point right up here at about 574.70. We breached below that area. Then I want to start looking at this whole high volume area on the profile, about 568.65 down to about 560.67. Next, we jump over, take a look at the 30-minute volume profile real quick, and notice it doesn't get any better than this, a perfect D as in dog shape profile. Now, if you guys remember in yesterday's video, I talked about with the B as in boy shape profile, if we break below the lower distribution, where was the next stop? Right here at this high volume node right here. look at where we stopped today. We stopped right at that high volume node. Now, as we come on, look at the Nasdaq futures on the 4-hour chart, you guys can still see the zone that we drew out today on the live stream. Candle body to the candle wick. What do? Whoop, we wicked right down there and we came right back up. But now, are we setting up a potential A to B equals C to D pattern on the way down? We talked about this on the live stream. Here's the A to B leg. The B to C leg is a corrective leg, and that gives us a price completion at about 23,731. But with every ABC pattern, this would be the validation point. Now, it doesn't mean we can't get into a trade early and use this for some type of runner target out here. Now, something I failed to mention about the S&P as well, notice we still have not tested value area high from the prior week. And the reason why this is important is because we closed outside of value. Anytime we close outside of value, we expect within the next 1 to 2 sessions, we're going to come back and revisit that level. Since we're dealing with a weekly volume profile, a session equals 1 week in time. Now, as we come over, look at the daily profiles real quick, kind of a D as in dog shape profile. And you can see we rotated through yesterday's volume profile area. We got down below value area low. We whipped all the way back up. We came all the way back down. We wicked all the way back up, and then we whipped back down once again. Now, if you notice, we are slightly closing below value area low at 23,897. If we get back above it, I want to target 23,924 and then value area high about 23,962. Now, I do want to caution you guys. I do think value area low is likely going to get tested, but with all this consolidation, testing out some of these key levels to the downside, coming back down towards that structural breakout point and even completing that ABC target to the downside. Now, if you guys would like to learn about take profit traders, trade copy rules, make sure to watch this next video right here.